Welcome back, everybody. It is Tuesday evening, and this is Vetted VA Live, where we get together every week to talk about mortgage and real estate topics pertinent to veterans and members of the Vetted VA group. If you're watching this on YouTube somewhere and you are not aware of or not currently a member of the Vetted VA group, go out to Facebook, do a search for Vetted VA, and jump in there. For those of you who are aware of the group, you know that we have a group of vetted professionals, both on the real estate and the mortgage side, that are pretty much there 24/7, 365 to answer your mortgage and real estate questions, sort of like a bat phone for mortgage and real estate VA issues to get exactly what you need. And here in the context of this show, we get together to cover a topic, but most importantly, to answer you guys' questions. So if you're here, you're watching, you have mortgage and real estate related questions about using your VA benefit, about buying a home, refinancing a home, did a few show last week. Was it last week, Jason, or was it a week before on using the VA IRRRL? So buying, refinancing, anything VA related, let us know. Throw up a question in there. We're happy to go through it. But tonight we're talking about understanding eligibility, getting your certificate of eligibility, what entitlement means. We get some confusion when people see their certificate of eligibility and say that they have a $36,000 entitlement. So we're going to go through all of that stuff, including funding fees, and walking through and explaining it. So a lot of what we're going to talk about tonight, we've covered in different episodes, but everything sort of falls under this umbrella of your eligibility, getting your proof of your eligibility, using your benefit, and the funding fee. So we're going to go through a bunch of catch-all. So joining me tonight, Jason Rivera, a realtor from down in the San Diego area, and Andy Trano in Minnetonka, Minnesota. So we got a warm weather climate and a far less warm climate in Minnesota. But it's probably, is Minnetonka fairly warm this time of year, Andy?
Oh, it's hot and humid now. We had 90 degrees and a lot of humidity. So we've got our month of summer we're enjoying.
So, well, you would probably prefer Jason's weather in San Diego. It's a little bit better. Ours in Orange County is not too bad, but San Diego is about as good as it gets. They get a little warmer than we have here in Orange County. So let's jump in and start. This is a broad question. And the reason why I kind of wanted to throw this out here, we're not going to be able to answer every question of every possible permutation, because if you see the list on the VA website, they've got about 12 different drop downs of different enlistment periods of what the requirements were for being eligible. But Andy, in general, what's required for being eligible for a VA loan?
Yeah, essentially you got to have 90 days of active duty and be honorably discharged. So that's the main things, is that again, you were honorably discharged and that you were active in your service.
And if you're watching and you're National Guard or reservist, we did an entire episode on that. I would say, I don't know about you guys, but the folks who have the most confusion or uncertainty about whether or not they are eligible, I would say are National Guard and reservists, just because they have the point system where they're having to build up points over time. And we did an entire episode. We had some great guests that walked through that. So if you are a Guard or reservist and you want to check that out, what we'll try and do is put either in the comments or down in the description a link to that episode so that you can check that out. Also, in terms of eligibility, Jason, this not super common, but some surviving spouses of veterans are eligible. What circumstances can a surviving spouse who wasn't the veteran themselves possibly use their deceased husband's benefits? Spouse's benefits, I should say. It could be a wife as well. I was being sexist there. I apologize.
So a spouse would be eligible if they're if the active duty member or veteran died or passed away in active duty, and or if they passed away with a service related condition that caused them to pass away. I feel like there's one other situation where it has to deal with service related. I don't know if you guys can jump in.
Those are the big ones but they are pretty uncommon.
Right.
They're fairly uncommon as we get further and further. I would bet probably in the 70s, there were probably a lot of people who had spouses die in wartime. As we've had lesser and smaller conflicts, it's less common. The one that does come up, and I had a situation, and we never kind of quite got to the bottom of it because the borrower decided not to move forward with the purchase. but the husband recently died and had their service-related disability was from Agent Orange in Vietnam. And I was looking at the death certificate, and I'm looking at there was like 3 or 4 causes on there, and you couldn't really tie it back to that being the cause. Have either of you guys ever actually had a file where we had the surviving spouse with the service-connected disability being the cause of death?
I personally haven't.
No, I haven't either. Like you said, it's not that common that you run into that.
Absolutely. So let's say we have a borrower who believes, someone considering buying, borrowing, and they believe that they are eligible. What is the certificate of eligibility? And maybe, Andy, just kind of talk about both the certificate of eligibility, how to get it, and where the DD-214 comes into play. And just to give you guys some background, I am much older than you guys. And when I started, we didn't have the internet. So getting your certificate of eligibility involved going down to the VA and or taking your DD-214, filling out the form, mailing it off, and waiting a long time to get it back. So with the joys of the internet and online services, it is much easier, but sometimes that DD-214 is needed. So why don't you walk us through that, Andy?
Yeah, so the vast majority of the time when I have someone reach out, I can go directly to the VA portal and input their social security number and the year that they're born, and it pops up right away with the certificate of eligibility. That certificate of eligibility is going to confirm that, yes, they are eligible, they have entitlement available. It'll say things if you currently have a VA loan that's outstanding, we'll get that information on that certificate as well. And we'll get into later in this show, what that means and how to use a VA loan for a second, third, fourth, fifth, however many times down the road you use it. But bottom line, it's going to tell us you're eligible, how much entitlement you have remaining. And then another key piece that's on there as well is any disability payment that they're getting. So 2 important things there. The funding fee, which we'll get into later, is going to be waived if you're getting a disability payment. So that will show up on that certificate. And then we'll be able to verify that payment. So anytime we're doing a loan, any type of income that we're using, we've got to verify that income. And it's so easy with VA because that income is listed right there on that certificate of eligibility.
It's the easiest form of income that we will ever get. When someone says we have that and they say, what do I have to provide? I say, you don't have to provide anything. Either you get certificate of eligibility or I'm going to pull it and we've got it. We're all good.
Exactly. You already gave me everything I need. So that's easy. Now, like I said, vast majority of the time, that's what it entails. Every once in a while, it says, no, we couldn't pull it based on that. That's when I'm going to need more documentation from the veteran. So we're going to need their DD-214, which shows their service record. I can't remember the National Guard letter. It's the NGL. I always forget the name, but it's a National Guard version of the DD-214 would be the sister document to that. But with that, we send that in to the VA along with their service history. And someone then goes and manually looks up their service reports to make sure that they're eligible. And depending, I see my more recent people getting out, I'll get those back in a matter of hours. Sometimes when I've got older veterans, it can take a few days to get that back. If we want to tell war stories, I've got one that we worked months on. That was a fun one.
You're 100% correct that it's generally older veterans just because the records were worse. The more recent veterans where most of the records start off digital, almost always going to pop right up. I would say the guards and reservists are also more likely to have some issues there just in terms of their points. We just always seem to have them saying, well, I got my last points in the last 12 months. They're not applied. But what I've found, and it sounds like you've found the same, is if we do need the VA to get involved, they're pretty quick to help. If it's a change, an update, if you need to review a DD-214, I mean, we shouldn't be having a certificate of eligibility emergency. But if it's something that we need done, they're pretty darn helpful and likely to jump in. I mean, you hear horror stories of different elements of the VA of having to deal with them. But from our end on the mortgage side, they're generally pretty responsive and pretty helpful.
Yeah, they really are. And like you said, it's the recent ones, guys who got out in the last couple months, they may have to look it up, but it's all electronic. So you get it back in a matter of hours. The one I kind of referred to, there was a fire at one of the records offices decades ago, and my veterans records were burned. So we had to go get old documents from other places. That was totally a one-off, shared it in our group at Vetted VA. And it was a very unique scenario because, like you said, the vast majority of the time, they're very responsive. We get what we need pretty quickly.
We actually have a really good question here, pertinent to what we're talking about right now. Just Be Yourself says, how long do you need to be active duty prior to buying? So let's go way out on a limb and assume active duty post 1990. So what are we talking? We need 24 continuous months.
No, 90 days.
90 days.
90 days
So,
active duty service. They don't count your boot camp. So as soon as you are out of your training, so 90 days active, we'll get them.
So pretty darn quickly after enlisting.
And that's of active duty.
Right.
So if you're ordered to active duty, the 24 continuous months that you were referring to there is if you're not active. So that would be the two ways to do it. But if you're called up in order to active duty, 90 days and you're good to go. It also brings up a good point. If you're active or overseas, you may not be buying a house here, but your spouse or your kids can satisfy the VA's primary occupancy requirement. So that would be the situation where someone who's still active, only 90 days in, might be using their VA loan while they're still active.
That's a really, really good point. Jason, for your buyers, how VA buyers that show up, do most of them already have certificate eligibility or know they can get it from e-benefits, or is this a process that you're generally having to walk most buyers through, or does the lender handle it once they're doing the pre-approval?
For my side, it's probably about a 50-50. Some, especially first-time home buyers, they're like, a what? And then those who maybe already own a home or purchased a home before, could be rental or they've sold it. But, either way, I will walk them through. So it used to be e-benefits, and I think e-benefits is still there, but it seems that the VA is kind of phasing out e-benefits to just va.gov. Either way, you'll get to the same length, but essentially it's something like you go to the va.gov, the upper left-hand menu, you're going to go down to the housing assistance, and from housing assistance, you can request your COE. Prior to that, you'll have to log into it. The government's going to this, all their government sites are going to be the same. I forget what it is, like login.gov or something like that. So
ID.me.
I couldn't remember exactly, but they're going across all of them to the same ones, because there have been probably half a dozen different ones through the years. Anyway, you establish your log in through va.gov or ebenefits.va.gov, however you get to it, and you can actually view your COE. And if for some reason you didn't want to work with a mortgage professional or loan officer, you could actually request your COE yourself through there. But it's going to be a lot easier to call up like Andy or Josh and have them do it, because they have the fancy systems that's a little bit more direct with the VA. Or you can also pick up a phone and call the RLC and have a conversation. They'll also walk you through it. I think I answered that question. I feel like I might have been missing something, but
no, we got it. Now, why don't we start going back through and what does the entitlement mean? So we have certificate eligibility. It says you're eligible. You've never used it before. You got $36,000 of entitlement. That confuses the heck out of most of our veterans who do pull it before they come to us. Andy, from that perspective, what does $36,000 of entitlement actually mean?
It means you get $36,000 house. That's it. No.
That's the question, right? That's where I pulled it. It says I'm only entitled to $36,000.
Yeah, I can't get a Honda for that. Like, come on, Trino, what are we going to do? No, so that 36,000. I mean, that goes back decades from my understanding, and getting a little bit deep in the weeds. The VA is not making the loan; they're guaranteeing a portion of the loan, 25% of the loan, and that 36,000 goes back a long time. And essentially, what's important for the people to know is if you see that 36,000, you have not used any of your entitlement. So that first VA loan that you can get, there is no limit on the loan amount. Now, obviously, you got to qualify for the payment that you're going to get, but the VA does not cap that loan limit. So if you see that 36,000 available, the sky's the limit as far as what the VA will guarantee, as long as you meet the other underwriting requirements.
And in boring terms, let's look at it. So the 36,000 is the guarantee. If that's 25%, you look at it and go, okay, 144,000. And that's what really freaks people out. They're limited to 144. But prior to, was the Blue Water Act, was that 2020, you guys? Was it 2020?
January 2020.
Okay,
Yeah.
so 2020. Yep. Prior to that, you could go to your county limit. So if your county had high balance loans, they would guarantee 25% of that. If it had standard Fannie Mae, Freddie Mac loans, they would guarantee 25% of that. And you could go above it, but you were going to have to make a down payment. But the Blue Water Act, which I think we've covered actually here on an episode, you don't have a limit. If you have full entitlement, you can buy anywhere you want with zero down. So Jason, in your market in San Diego, even most entry-level homes are pushing up above the county limits. Is that for most of your buyers? Are they looking at going above the standard balance limits?
Yeah, I mean, I would say that the entry-level medium home price here in San Diego is right around $1 million. Which is really pushing the conforming loan limits here is like 1,000,006 something. That it's not an even number. So
you guys have
one of the perfectly memorized.
San Diego County is one of the only ones that doesn't max out. So it's above the standard balance, but it doesn't actually hit the full max. So no one ever remembers San Diego. I'm sure there are some loan officers in San Diego County that actually remember it, but they're the only ones.
But yeah, they definitely push that number. I mean, first time home buyers are always trying to shoot under that, which it's crazy to think that a first time home buyer is looking at something that high, but that's the West Coast.
Yeah, no, it is. We've looked, a realtor that I used to flip houses with, she sent me a listing this week. She goes, you remember this house? It's a house that we bought for $240,000. It was terrible shape. It was a foreclosure. We fixed it up. We sold it for $375,000. And the people that we sold it to 13 years ago have it on the market for $850,000. And it is very much an entry-level home. So depending on where you're at, these can be entry-level homes. And that's the beauty of the VA loan. Zero down, no mortgage insurance. You're not paying some big interest rate hit like when you go high balance on a conventional loan. You're getting with a minimum down payment, you're getting a close to a 1-point hit there that pushes the rates considerably higher. Let's talk a little bit. Again, we've done an entire episode on bonus or secondary entitlement. Andy, what happens if someone bought a home 20 years ago and some of their entitlement is used? Can they use their VA again? Can you have 2 VA loans at once?
Yeah, absolutely. It's a good question. We get it all the time. And I actually just had someone this month who was told that they had to pay off their old VA loan. So it's even other professionals out there are giving bad advice. But, first and foremost, you can absolutely have multiple VA loans. It's something that we're going to see when we pull that certificate of eligibility. We'll be able to see the amount of entitlement that's already been used. And then, you kind of referred to this earlier, but we're going to look at the county loan limit in the area that you're buying, do some math to figure out how much the VA will guarantee in that county, and then subtract out the amount of entitlement that's already used. And then from there, we can tell you how much you can buy with zero down. And that's another key thing that sometimes people glaze past. If I come to you and say, hey, you've still got enough where you can buy, up to $480,000 with zero down. That doesn't mean that's what you're capped at. That means $480,000 zero down. Every dollar after that, you're putting 25% down. So if that person wants a 580 house, they can go and get that. They just got to put down a $25,000 down payment, which is nothing. I mean, you're talking about comparing to conventional loans and other products. That's a fraction of what you'd have to put down, again, to have a lower rate and no mortgage insurance.
So, Jason, I think we had you on an episode before. I could be wrong and getting confused here, but you had kind of walked us through restoration of entitlement, whether it means selling the home, and then also potentially a one-time restoration. You have someone that wants to use their benefit again. And we've had, again, Andy just talked about misinformation by mortgage professionals, but this isn't necessarily misinformation, but mortgage professionals saying, hey, let's refinance your home over into a conventional loan. Now we can use your VA benefit, and maybe the right move for you, may not be the right move for you. So when you have veterans in your heavily VA market, getting PCS, moving around, and may have multiple properties, why don't you walk us through some of the options for restoring your entitlement if you don't have the big down payment, but you do want to buy a second property?
You kind of touched on it a little bit. One, I mean, you could always sell your property, right? So selling the property that was under the VA loan is going to restore that entitlement that property used. I would say it would free it all the way up, but if you own maybe 2 homes that are under a VA loan, it's only going to free up that portion of that entitlement that was used on that purchase. The other option is what Andy had mentioned, is looking at the bonus entitlement. Now, the bonus entitlement, you may run into a scenario where you're capped out at $400,000 and you're wanting to buy a $500,000+ home, and then you'll be required to put a down payment. So that may not work out for you because you may not have that down payment. The last option is where, let's say you have that home and you have at least some equity and appreciation in that home, where you're eligible to refinance that home into another loan product, ideally a conventional loan, then request a one-time restoration from the VA. The VA will still acknowledge that there was a loan for that prior house, but they will restore your entitlement as if it's free and clear. In this case, you'd be able to purchase any home that you can financially qualify for at the zero down, just as if it was your first time. The key to this, though, is that once you've purchased this second home, let's say you PCS or you want to move and you want to use your VA loan again, you're going to be required to dispose, aka sell, both properties, both the one that's in the conventional loan and the one that you just bought, to restore your full entitlement from your VA. And so that's one of those things where it's kind of like the one-time restoration. I always tell people, it's an amazing benefit, but realize that at that point, you're probably going to be wanting to do like a 1031 exchange, which is outside of this topic, but moving your investments into a different investment portfolio, and then freeing up your VA loan to buy a new residential home.
It's a pretty big gotcha. And there are a lot
Yeah,
of loan officers that don't understand that. And they think it's like a get out of jail free card. Hey, we want to use your VA. I want to do a loan, and now I can do a refi and a purchase if I do this. So you get loan officers that are they don't give you all the details. And it's a pretty darn big gotcha there.
I think maybe at one point, either the VA maybe didn't track it very well, or, I mean, I know it shows up in your COE now, but maybe there was a period of time where it wasn't being tracked, or I don't know. But I've met people who have done a one-time restoration more than once, and I just tell them, well, you slipped through the cracks, because I know I've seen them on the COEs. I know the VA is against it. It's not supposed to happen. It's written that it's a one-time restoration, but I know there's a few people we may even get questions saying, hey, I've done that, and just realize you somehow slipped through a crack, but don't count on it.
Yeah. So let's talk about, we've determined you're eligible. You have eligibility. You can use the VA financing. We just went through a bunch of different scenarios. You could be a first-time buyer, 90 days of active duty. You just went and bought your first home. Pretty simple situation. But Andy, why don't you explain what the VA funding fee is and how it varies for different buyers in different circumstances? Then we can kind of talk about the pros and cons and what you may want to manage to make sure you're minimizing that cost.
Yeah. So, bottom line, the funding fee is there to help keep the program running. So that's how the VA collects money to get the program going, along with interest rates. What it is, it's a one-time upfront fee. Doesn't need to be paid in cash, so you can add it to the balance of the loan. And it's going to vary based on a number of things. So the biggest one, if there is a service-connected disability that's getting a monthly payment, you're exempt from that funding fee. So many service members don't have to pay the funding fee at all, which is great. Obviously not great that there's a disability, but great that they have that benefit that they don't have to pay it. From there, the big variables that you're going to see are if it's your first use or subsequent use, and then your down payment. So a higher down payment is going to have a lower funding fee. So pulling up the chart here, first use with less than 5%, which that's the vast majority of VA loans that I see is, one of the big benefits is you can do zero down. So zero down, first time home buyer, they're going to be paying 2.15%. If it's a subsequent use with less than 5% down, that jumps up to 3.3% of the loan amount.
And Andy, let's just put that in numbers for anyone looking. If we say median home price in the U.S. is plus or minus $400,000, that additional 1.15% is close to a $5,000 additional cost. And a lot of times veterans look at it and go, it's just the cost of doing business. They're going to add it to my loan. I don't have to pay it out of pocket. But that's a chunk, $5,000. And if you're buying a $600,000 or $700,000 or $800,000, it can double that.
Yeah. It's not a small number and nothing to scoff at. Absolutely. And, at the same time, if you're looking at an FHA loan, which also has mortgage insurance, you got that 1.75 there. So that's, it's part of the cost of doing that and having the benefit of that lower rate and the option to put zero down.
What I like to tell veteran borrowers, and probably this is the best example I have of, we got a guy in Texas that we're dealing with right now, selling his house. He's going to walk away with about $80,000, and he's asking, they're going to buy $1 million home, and he's like, should I do zero down? I have some other things I would like to do with this money. Well, now I'll take $1 million home, subsequent use. If he does less than 5% down, 3.3% is $33,000 that's going to get financed on top of his loan. So when we go through that and say, we do 5% down, it takes 50 of your $80,000, but we're at 1.5%. It's an $18,000 difference. It's pretty significant in terms of the monthly payment. First of all, your loan is $50,000 smaller. That's about a $300 difference in your monthly payment. Now we have the other $15,000 by not tacking on that funding fee on top of there. And you got, a $400 difference in the monthly payment. And there are a lot of people out there that don't do a lot of VA loans, and they don't quite know how to quantify that for the veteran. And most veterans don't deal with mortgages all of the time and don't know it themselves. So it can be appealing to say, hey, I'd love to do zero down. And the VA absolutely allows you to do that. But hopefully you're working with an advisor that can walk you through what the exact cost is. And that's an extreme example of someone moving up to $1 million house and potentially doing zero down with it and not being exempt from the funding fee. But that's really where it comes into play of wanting to look at those numbers. And just, you talk about there's not really much benefit beyond doing 5% down, because whether it's first or subsequent use, it goes from 1.5 to 1.25. Okay, 0.25%, do whatever you prefer or feels better to you at that point. But that, less than 5% down, it is a real difference.
Yeah, especially on that subsequent use. That's a huge drop off. And like you were saying, you got to at least show it to them so they know the option that's out there, and they may have a reason they want to hang on to that cash too. But ultimately, got to show them the option and let them make the choice.
And the VA's thought process with it there is, we absolutely want to make it easy for people to get into a first home. Hopefully with your first home, you built up some equity and you can put the down payment on the next one, which reduces the risk to the system, and therefore they can charge a little bit less. If you're not looking at buying and looking at a cash out refinance, this is another area where this comes into play. Subsequent use on the cash out refi goes to 3.3%. So Andy, I don't know about you, but I would say the majority of my VA cash out borrowers are people who are exempt from the funding fee, because that's a chunk.
Yeah, typically, yeah, I would agree that the majority tend to be. Yep.
Because I mean, it's funny. It says first use 2.15. I don't know that I've ever had someone buy without using their VA and then come back doing a cash out with the VA. So it's like pretty much it's 3.3 across the board. And when people see that, and the VA loan program is really the only one that will allow you to go cash out above 80% right now. So also an awesome benefit that they allow you to go all the way to 100 with most investors, but you're gonna pay a chunk for it.
Yeah, going above 90 is going to have a bit of a hit for you, but yeah, you can go to 100, and it's the only one out there, and the rates are significantly cheaper than anything else you're going to see for a cash out loan.
Jason, why don't you walk us through? So we talked about paying the funding fee. There's exemptions to the funding fee, but we have more and more veterans getting service-connected disabilities, and there's timelines for that. What is important to a VA buyer who may have a claim in process or think they're going to be making a claim for disability? How does that come into play in terms of wanting to buy now, but thinking that they may be determined to be exempt from their funding fee?
The key is getting that claim in, starting the claim. Mainly because once
of wanting to buy now.
I'm getting a little feedback.
That was me. Sorry, I was checking for comments.
Sorry. One of the keys is getting that that disability started, because when you're awarded your disability, I don't know why they use the word awarded. I kind of like, I want a disability, but anyway, when you're awarded your disability, in just about all cases, it dates back to the day that you started that claim. So in the case that, if you're thinking about putting in for your disability, or maybe you're getting out and, going through that process, if you hold off until you've at least started the process and then were to purchase, and you'd still end up paying the funding fee. Well, I think there's an exception to that too now, but if you end up paying the funding fee where you had a claim pending and you were awarded 10% or more disability, that funding fee would be reimbursed to you from the VA.
And really important to point out that you have to have started that process before you get the loan. So
Yes.
Even if your disability occurred before that, if you didn't start the process, you can't go back in time then.
Right.
Another trick that I just learned recently, have you guys ever heard of filing an intent to file?
I have not, but aren't we? Isn't that listed on most of our lenders now? When we do a VA loan, they're asking us, do you currently have a claim in process? But haven't some of them added it into the boilerplate on their form? Do you have I think I've seen the phrase, but I've never heard it before.
Yeah, so I just learned about this from a good realtor partner of mine who's a veteran, and he actually used it himself. Like the week before closing, he called up the RLC and was able to file an intent to file. And all that said was, I'm intending to file for a disability. He didn't have to say what it was for. It just basically put a mark in there on that date saying that he was intending on filing. I don't recall the timeline, but he had a certain amount of days to go and actually file after that.
But 1 year.
Was it 1 year?
Yeah, 1 year.
That's what I thought too, but I wasn't positive.
But you can renew that too, I believe. But I know it's
Okay.
1 year from the initial start of intent.
Yeah, and that's huge. I'm bringing it up with every veteran since I learned about that. You might as well put that intent in there. There's so many of these injuries that you may not be totally aware of until years later when you start having health complications. So, put that intent in there, and you could file 6, 8, 10, even if you refile, over a year later, and get that funding fee reimbursed down the road.
Depending on where you're in the country, again, not to beat a dead horse, but these funding fees are real money.
Yeah.
I have a lady here in Southern California, $840,000 purchase. That 2.15 funding fee was $18,000. And she thought she had filled all the paperwork out in the right timeline and had not, and is not going to be getting a $17,000 refund that she thought she was going to get. So it's real money, and those timelines are important to make sure you're following them. So if you think you may be approved for a service-connected disability and you're buying a house, absolutely double, triple check and get expert advice on this, because I don't think there's really anything in the process where you could cost yourself more money by not exactly following the steps on that. Regarding funding fees, do you think either of you think there's anything we haven't covered that veterans should know?
if you have a Purple Heart or a spouse, if you're a surviving spouse, your funding fee will also be waived.
So service-connected disability, awarded a Purple Heart, surviving spouse. Again, other options there for you being funding fee exempt. Let's talk about one of my favorite ones because they come up very, very rarely and people are frequently told absolutely no, that is not possible. Andy, can a veteran and a non-veteran buy a home with VA financing?
Yes, the famous joint loan. So that's one of those situations too where a lender may tell you that they can't do that. But that doesn't mean that every lender can't do that. It's lender specific. Just because the VA says it's possible doesn't mean that every lender has to do every loan that the VA will guarantee. So some lenders may say, no, we don't do that. But it is absolutely possible. Now, joint loans can be veteran to veteran or veteran and non-veteran. When you are doing a veteran and a non-veteran, the VA is only guaranteeing the veteran's portion of that loan. So what that means to your purchase is that you're going to end up having to bring in a down payment because essentially the VA is guaranteeing half of 25%. So you're going to end up bringing in about 12.5% if you're doing a joint loan with a non-veteran. Another key thing there, does include your spouse. Your spouse, if you're doing a joint loan with your spouse, that isn't a joint loan, you're married, so you can still do zero down.
It sounds crazy. I've got another veteran that we hopefully getting an offer accepted tonight down in Texas. And he had told me before that he didn't want his wife on the loan. And we're just going to have her on title. And so I called and said, hey, I just wanted to confirm before I send the pre-approval package over that she's not going to be on the loan. She's only be on title. He says, well, she's not a veteran. I don't think she can be on the loan. I go, no, you're absolutely okay. If you want her on the loan, she can be on the loan, but she doesn't have to be. So another common misconception there. So how does it work if we have two veterans? Are they both using half of their entitlement?
That's the most common thing, is that they split that entitlement equally. Now, you do have situations where they may not have enough eligibility with one veteran or another. So file I've been helping with this week, they're maxing out both veterans' entitlement. They both had prior homes. So one of them, it's very close, but one of them's using about 58% of the total entitlement for the transaction, and the other's using about 42% of the entitlement. So to answer your question, yes, they can both use their eligibility, and it can even be split unevenly if necessary.
Do you happen to know, can it be split? Use all of one's entitlement, and just the fact that the other is an entitled veteran allows them to be on there without having to make that 12.5% down payment?
Yes.
Yeah.
Yep. That's also possible.
Okay. Yeah, it's an interesting one. A couple of things to be aware of if you're thinking of this. Kind of the reason why that myth is out there is, I don't know about you guys, but when most people ask me about it, they want to know, can I buy with a non-veteran and do zero down? Once you explain that 12.5% down payment, about 98% of them go, well, that doesn't work. I don't want to do that. They'd rather go do FHA or a 3% down conventional. But an important piece to remember, if the program does work for you, you want to go that route. As Andy said, not all lenders do it. But even those that do, 99% of lenders have prior approval where they're going to approve the loan. VA doesn't have to see the file. On a joint entitlement like that, where we're doing it has to go to the VA for prior approval. So it's going to add a little bit of time to that process.
Actually, I hate to be that guy, but the VA does not require prior approval on that. It's actually one of my back and forths I've been having with a lender. They do not require that prior approval anymore, but some lenders still do require it. So it's not specific to the VA, but a lot of lenders, and this one that I've been working on this week, they were requiring it. Basically, they were scared. And when I say scared, these lenders, they don't want to end up, having an $800,000 loan on their books. Their intention is to close the loan, sell it off in the secondary market, and move on and lend more money. So they wanted to do it to protect themselves, but it's not a VA requirement anymore.
Well, what's interesting in saying that is a part of the reason why many lenders didn't want to do it is they don't want. So there's the part where it's nice to have the VA do the prior approval because you have it in writing that they're okay with it. but it's a process. Like anything that does require prior approval, you basically have to have full loan approval ready to go to docs. Now that package goes to the VA, and whether it adds 2 days or 2 weeks, a lot of lenders just say, we have enough VA loans. We're not going to deal with the headaches and the hassles there. So that's great to know that it's a fairly rare loan program, but if you're that borrower that needs it, should open up better timelines for completing them, but also more lenders willing to do them.
Absolutely.
So we've covered a lot of ground. I had on here some misconceptions, and then we talk constantly about the benefits of VA loans compared to conventional loans. So if you are eligible, but we're 40 minutes into this, always like to give the guests time to share their thoughts, any tips, tricks related to tonight's topic, or anything just in the current market or VA mortgage and real estate related. So, Jason, did you have anything on this topic or anything else you wanted to share tonight?
No, I think we kind of covered it. I mean, I don't really have any final last words.
No words of wisdom for us tonight. All right.
Here, I'll give you one. I'm just going to reiterate what I said earlier. Is if you already own a home and you're looking to buy a second home, make sure you weigh the cons of doing your bonus entitlement, or really taking a look that, hey, a lot of people think they don't have a bonus entitlement. I even kind of didn't think I had a bonus entitlement. I have 2 VA loans here in San Diego. And I kind of forgot that I had put money down on my second home. And so I went ahead and did the calculation, and lo and behold, I could still buy a $360,000 home in San Diego with my VA entitlement.
Could you find the $360,000?
Yeah, I don't think I'm going to move into a $360,000 home, but nonetheless, that option still exists, even with 2 VA loans. So a lot of people, I mean, even myself, sometimes think, hey, it's already capped out. The only way I can go is either sell a home or do a one-time restoration. And I always tell people, like, before you jump into the one-time restoration idea or think about selling, let's just do the calculation. Let's pull your COE and run the calculation and see if you have anything. Because that, maybe you don't have the down payment today, but you might have 2 homes that have enough appreciation or equity where you can do a HELOC or pull some money out or whatever the case may be. Sometimes it's not as far-fetched. It just takes a different person looking at it and saying, hey, you have options. It's not always just cut and dry. So there's my wisdom.
And I'll follow up on that with, this is a good time to talk about, if you're not a member of Vetted VA, get out there and get in the group. Someone in the group can help you through these numbers. You can go to the map at vettedva.com. We have pros in every state that are happy to walk through this math with you and help you determine what your options are. With that, any parting shots for us, Andy?
Yeah, I'll have a couple. First, Jason, come up to Minnesota. We got houses, 360 for you.
You're going to retire from San Diego to Minnesota.
Yeah. But that aside, kind of what we're all about here at Vetted VA is educating people. And for anyone out there who might have been told no or doesn't think they're eligible, reach out to one of our pros that understands this and can educate you on what's actually available. Like I mentioned a couple times, there's a lot of lenders who have specific overlays. That doesn't mean the loan can't be done just because someone else told you no. And the other thing to remember is that those loan limits that we use to calculate your entitlement, they change every year. So if 2 years ago, 3 years ago, someone told you 360 was your max, those loan limits went up, and they tend to go up every single year. So that 360 might be 480 now. And, houses have gone up too. So it tends to correlate. But, it's worth checking into again and seeing if maybe you are able to get more house than you thought.
Absolutely. And just again, to reiterate, all of the vetted pros on the real estate and the mortgage side, most everyone was drawn to this group because we're the nerds that love the guidelines and digging into them and figuring out what is possible instead of saying no, or that no doesn't sound quite right. Anyone that you would talk to as part of the group has dug into those guidelines, is willing to dig in the guidelines. A lot of times, none of us can have comprehensive knowledge of all mortgage and real estate guidelines. So a lot of times when that question comes up, I may have never heard it. Someone in the group has. Andy knows that you don't need prior approval on that that joint entitlement. So when we're looking at these things, that's the power of the group. I am amazed that no matter how crazy, weird, off the wall situation I have come up, if I go out to the group and ask about it, someone goes, "Oh, I had that. Oh, I went through that. Here's how you solve it." So it's a great resource. Make sure you're using it. We appreciate you being here and watching tonight. Appreciate Jason, Andy, the two of you being here, sharing your wisdom and knowledge. We will be back next Tuesday with another set of pros and another topic. So be sure to join us. All right. Have a great night, guys.